Liftoff. We have a liftoff.
$50,000 last night for the very first time ever. But after doubling its value in less than 2 months, take a look at the high hit today for February Bitcoin futures on the CME, 51,065. Okay, there's more though. A lot more, especially when it comes to what's driving this historic run for the cryptocurrency. Let's bring in Diogo Monica, Anchorage co-founder and president, and Isaiah Jackson, KRBE Digital Assets Group co-founder and author of the book Bitcoin and Black America. Isaiah, I will go to you first because you were recently on and you predicted that cryptos, and not just Bitcoin, would continue to go higher. Does 51,000 surprise you?
Not at all. Actually, I think we're just getting started. And I think what you're seeing in the Bitcoin price is a reflection of the fact that inflation-based economies, fiat-based economies, tend to push people towards assets that beat inflation. And Bitcoin has proven that. And I think 50,000 is just the start. And I think we will see more growth throughout the year.
Yeah, you guys, I'm about to show you in just a minute where the April and May contracts are trading. You're not going to believe this, but just stay tuned for that in a second. Diogo, what do you think is the real driver? I mean, in just the last week or two, we have talked about BNY Mellon looking into Bitcoin. We know that Elon Musk over at Tesla has made that huge investment of $1.7 billion. Not to mention cities like Miami are very interested in now paying their employees in Bitcoin if they so choose to receive that. I would imagine they're doing it because they're getting requests for it. What else would be driving this?
Yeah, I think we have to realize that this is a very different run from the one in 2017, which was primarily retail driven. This time around, it really are the institutions that are coming in, taking a position in Bitcoin and really validating this capital preservation goal, this digital gold narrative that has won the hearts and minds of for Bitcoin. We're seeing companies like Tesla put $1.5 billion of their treasury on Bitcoin. Companies like MicroStrategy just this morning saying that they're going to allocate and fundraise $600 million more to buy more Bitcoin, and obviously Square, which was one of the first ones to come into the space.
Okay, and you know, you guys, there seems to be so much optimism. Some might call that a little sort of bubblicious behavior. Isaiah, I now want to show the April high that has traded on the CME for futures, and now we're moving higher, 52,630. Guys, flip it over to May, and we're at 53,375. That was the high, again, that traded today, basically, for these futures. We'll get to June in a second. Hold back on June for a minute. But Isaiah, something tells me that there has to be a moment where things climb, let out a little air, fall, and then that allows them to climb again. Do you foresee any pullback here that's more than just a couple of $1,000s?
Yes, at some point this year, simply because that's how markets work. We have market cycles. You will see pullbacks at a certain point, but I want to remind people that in 2017, we saw no less than 30% pullbacks on the way from 3,000 to 20,000. So I don't think this will be as harsh because we do have institutions who are buying, and that dip is getting bought up a lot quicker. So we will have that, but we may be sitting here saying, hey, Bitcoin hit $100,000 and it crashed back down to 80. I don't think anybody will have any problem with Bitcoin long term. That has been the case. However, long term, 100% of people in Bitcoin are in profit today.
And Diogo, we do have to bring up the fact that you know, you are approved by the Office of the Comptroller of the Currency. And are they currencies, though? I mean, we know that, yes, Bitcoin is considered a currency, but the SEC is always that wild card. They have filed suit against Ripple XRP, saying that XRP is not somehow a currency, even though they got all kinds of approval to trade as such in the past. So where do you see names like XRP and Litecoin and Ethereum going along here?
I think it's very clear that not all cryptocurrencies are the same. And even though Bitcoin is considered a commodity, that does not need to be the same, or other cryptocurrencies considered to be the same. And we are seeing correlation on the price as we've seen, in which one cryptocurrency going up, in this case Bitcoin, really is driving the market up. But these cryptocurrencies have very different functionality. And you're absolutely right that Anchorage became the first federally chartered crypto bank earlier this year. And that's part of the reason why institutions can now do something that they couldn't do 3 years ago, which is confidently come into not just buying Bitcoin. They're really coming into many new protocols that all of them have different functionality.
Diogo, Isaiah, this is a story that continues, and it's exploding because here we go. The June futures high on the CME, let's unveil it here, is traded as high as 54,125.
Right. So as you know, the real question when it comes to these kinds of tokens is whether or not they are a commodity or a security. A security we think of as being a black box. The person who is selling it knows a lot more about it than the person who's buying it. So we have regulations that require disclosure so that the person who's buying truly understands what they're getting. If it's a commodity, in this case a digital currency, then everyone knows what it is, right? And it's an actual medium of exchange. Technically, Bitcoin has been defined as a commodity. It is a currency that's used on an established network, and it is used for the purpose of exchanging funds, exchanging value. And so that means that technically it is a commodity, and so it's not treated in the same way that a security is.
Interesting. I mean, as Bitcoin and some of these other cryptocurrencies continue to gain traction, you see more institutional money coming to this commodity as well, if you will. Is it just inevitable to think that we're going to see some sort of regulation drafted, whether it's here in this country or even maybe on a global perspective?
Well, we've already seen several bills proposed attempting to establish a new regulatory framework. See, the issue with regulation is that our securities regulations, by that I mean securities and commodities, are really designed in response to crises. And so they're very good at dealing with the risks that were raised in the crisis that they're now regulated towards. The issue with something like Bitcoin that's new is that then you have to put this very new innovation on an old framework. What I mentioned prior is that it's important that the regulation not be fear-based. And by fear-based meaning that it's not just a response to something that's new and just pushing back on the new and trying to force it into old boxes, but really regulation that's really based on risk. Figuring out exactly what are we concerned about. Are there entities within the market that are significant, that could really lead to knock-on effects in the market? And as such, then, you know, what is that risk? Who are those entities? And then what is the wisest, most reasonable way to defend against that risk without killing innovation? Because we don't want to have Americans who have great and brilliant and new ideas going offshore or being stymied because regulation is broad brush and not focused on the risk it's trying to prevent. And so I think that there have been many discussions about regulation. It's very likely, given the possible heads of agencies who have deep crypto fintech background, that there could be regulation. My hope is that that regulation, however, is based on the data, on the risk. It's targeted and not just based out of fear.
I wonder what you think about another trend we're seeing take root. I mean, MicroStrategy is in focus as a company we cover pretty closely on this show, but it's in focus again today. Those shares are under pressure after the firm revealed plans to sell convertible debt to buy more Bitcoin. It now holds billions worth of Bitcoin instead of cash for reserves. You saw that news last week with Tesla. Corporations replacing dollars with Bitcoin or other types of cryptos. Is this a trend we're going to see more of? Or is this something that could potentially be an area where regulators do take a much closer look?
I think whenever you have significant players in the market who could affect the overall economy potentially, right? That's how regulation is largely designed. A lot of it is based on making sure that those who are significant individuals, that there's enough oversight into what they're doing in areas that could lead to risk, because their risk can lead to risk for other people. And so I do think that being that you have these significant players who are demonstrating a commitment to Bitcoin, it's likely, I can't say for sure, it's likely that you'll see more of that as it becomes more accepted. So I do think that that is that could be a trend. And as you see people or entities of significance having more holdings, naturally the regulators that are focused on those entities will take notice. But I think, in doing that, it's important that the regulation is targeted, it's facts and circumstances based. What exactly is the concern and how can we mitigate against it? Do we need more disclosure? Do we need some kind of demonstration of proper collateralization if appropriate? To ask the reasonable questions based on the risk, but work backwards from the risk to the regulation, not just the regulation to prevent something that seems different, new, and therefore scary, but rather to start there.
Where are we in Bitcoin?
The beautiful thing about Bitcoin, I think, right now is what we have institutional buy-in. We didn't have that in the previous rally to 2000, and I think at this point in time we do have institutional buy-in. You're seeing some banks actually begin to look at custody. There was an article last week about Bank of New York Mellon actually beginning to look at custody for asset managers, and obviously the story yesterday about Morgan Stanley's Counterpoint group actually looking at buying into Bitcoin. So obviously there's investor demand to buy Bitcoin. The thing is, I think on Bitcoin you have to be very cognizant of is that the volume of Bitcoin actually traded on a daily basis relative to global asset markets is not that big. So if we do have an inflow of institutional money, and we do seem to have an inflow of institutional money into Bitcoin slowly creeping in, that was the case since last year, since people like Drucker Miller and Alan Howard and Paul Tudor Jones actually piled into Bitcoin, or at least took exposure to Bitcoin. There is some interest in speculation and some real money to allocate some aspect of the portfolio to Bitcoin. So we could see this rally extend in Bitcoin. However, you have to take it into a grain of salt here that the actual volume this Bitcoin is moving on is not moving on the volume of, let's say, an Apple or a Tesla or a currency which is similar in terms of value. I think you definitely see some real money allocation, but it's not going to be the size it's going to be that will determine portfolio performance.
Another big day for Bitcoin. That new record brings the cryptocurrency's gains in the past 6 weeks to about 70%. As far as what's driving that, analysts are pointing to some more interest from Wall Street and momentum building after Tesla said it was adding Bitcoin to its balance sheet. This morning, MicroStrategy, which really was one of the trailblazers here as one of the first companies to buy Bitcoin with corporate cash, said that it's doubling down. That software company plans to offer $600 million of convertible notes and then use those proceeds to buy more Bitcoin. Analysts tell me that these new corporate buyers are adding to some of that Bitcoin demand and may be helping boost prices. There's also some more Bitcoin interest on Wall Street. CNBC reported last week that JP Morgan was looking seriously at that asset class. And today there are some more reports out that one of Morgan Stanley's investing arms is considering adding Bitcoin to its list of possible bets. We also had MasterCard and BNY Mellon showing some new support for cryptocurrencies. All of this has led to a jump in bullish investor sentiment. According to Fundstrat, that firm's crypto fear and greed index is at about a 95 out of 100. That's what they call extreme greed levels. It's been over 92 for the past 7 days. There are still plenty of skeptics, though, for Bitcoin. A recent Deutsche Bank survey showed that investors see Bitcoin as the most extreme bubble right now in financial markets. And Nassim Taleb, author of The Black Swan, tweeted in the past couple of days that he's getting rid of his Bitcoin. One reason, he says, the cryptocurrency or any currency is never supposed to be more volatile than what you buy and sell it. The volatility, he says, hasn't dropped as prices continue to climb higher. Deirdre, back to you.
It is a global rally. It's putting pressure on bond yields too. What do you make of what we're seeing?
Yeah, there are obviously growing concerns that maybe this market rally, this rally of everything, it's stocks, it's obviously Bitcoin and cryptocurrencies, that it might be getting a little frothy, but I'm not so sure I'll use the B word that rhymes with double and trouble just yet, even though there are worries about increasing valuations. BlackRock had a note out this morning where they dubbed it risk within reason. Yes, the risks are increasing, but as they pointed out, earnings growth has rebounded and is expected to recover even more in 2021. Valuations, while starting to get stretched, are not at 2000 levels just yet. So I think that people are cautiously optimistic that this rally can continue, but you do have to be worried, and there could be pullbacks along the way because, you know, we have come very far, very fast in the midst of a pandemic and global recession.
And there could be ubbles. I'll call them, I'll skip the B if we are not talking, not using the actual word. There could be bubbles brewing in certain parts of this market, if not in stocks, which, to BlackRock's point here, I think is a very important one to watch. Now, speaking of Bitcoin, because you mentioned it, briefly passing the $50,000 level, a psychological level. You and I have talked about this already over the past couple of weeks, but I spoke to Mohammed Al-Arian yesterday and I asked him about other companies perhaps taking some of the cash on the balance sheet and swapping it out and adding digital assets like Bitcoin. Listen to what he had to say, Paul.
I think you'll see more companies do that, and it's because they don't know how else to mitigate risk. So it's part of the distortions of the financial markets.
They don't know how else to mitigate risk, and they add Bitcoin to the balance sheet as a way to mitigate risk. There will be some people here going, what? You are adding risk to your balance sheet here. Go on, what do you think?
About to scratch weird, what have you here. I mean, clearly, I don't know if this is about mitigating risk anymore. I think that having Bitcoin on your balance sheet, like Tesla, like MicroStrategy, and if we see other companies potentially do it, GM, for example, said they're not going to do it in a recent earnings call. It's really going to be about trying to generate excess return on cash that is really not getting much because of bond yields being so low for so long because, you know, by the way, the Federal Reserve is likely to keep interest rates near zero for the foreseeable future. But long-term bond yields are starting to creep higher, so you might have some more attractive ways to generate return through the treasury market, which is obviously safer than Bitcoin. You know, Bitcoin is obviously something that some companies will find value in, but we saw just last year, I mean, Bitcoin's now at 50,000. A year ago, it plunged to just above 4,000 in the midst of the beginning of the global pandemic. Not suggesting that's going to happen again, but Bitcoin is volatile with a capital V. I mean, I'm not so sure there are that many CFOs out there that want to put a significant chunk of it on their balance sheet, maybe a tiny bit like Tesla is doing, but they're not going to go all in.
Yeah, you raised so many great points here. It's capital preservation, and that was the risk that I think Mohammed was talking about. If you've got cash sitting on your balance sheet and it earns no return versus the risk perhaps that you have a really volatile and exciting period, particularly if you have to report quarterly. The ups and downs of that could be eye-watering. Paul and Monica, thank you so much. We will continue to discuss this. I know we will.
On Tesla, on Elon Musk. How much more of this are we going to see? You're not quite sold on the idea of Bitcoin becoming truly mainstream.
Well, it's a good point, Yusuf. I mean, I think, you know, most people look at Bitcoin, most sort of sober people would look at Bitcoin and say, well, you know, really, what are we looking at here? It just seems to be a tulip in a digital form. It's not a store of value because of the wild price swings. It's not a unit of account. You can't really buy anything apart from maybe a Tesla. In fact, you know, I think it's Nouriel Roubini pointed out that even current conferences dealing with cryptocurrencies won't accept cryptocurrencies as payment. So it's not really an asset, and it's not even anonymous because of the blockchain, so it's not so good for criminals. But having said all that, you look at MasterCard, you look at BNY Mellon, you know, and as you said, various other major financial houses getting involved. And, okay, they're hedging their bets maybe because, you know, just in case. But the fact that they feel the need to do that, I think, is telling. And after all, if you think back to, well, I don't know if we can remember that far back, but when fiat currencies were first introduced, I suppose in the 17th century, you know, they were greeted with deep skepticism when they were introduced. You know, what's a piece of paper? I mean, why wouldn't I take gold over a piece of paper? So, I mean, yeah, you know, stranger things have happened.
Another record high for Bitcoin this morning, now up over that 50,000 mark, up more than 60% since the beginning of the year after quadrupling in 2020. As you know by now, Tesla, MasterCard, BNY Mellon, PayPal, some of the major firms investing or at least integrating crypto into their business model, Mike. And then you got the likes of Sheila Bair and this morning on Squawk, Bullard, sort of accentuating the risks.
Yeah, certainly accentuating the risks if, in fact, the thesis here is, Bitcoin becomes this autonomous global, means of exchange, and it threatens existing currencies. To me, I'm not sure if that's what's animating the story, at least in this moment. Clearly, it seems like it's diversification, it's momentum, it's displacing gold for whatever you thought gold was. Whether you thought it was kind of a folly, whether you thought it was this, great hedge or just a speculative asset, that to me is the first step in what Bitcoin is trying to supplant. Whether it, makes sense or not, whether it's the best design thing or not, you have buy-in. And then you have things like MicroStrategy where, just kind of like, laundering Bitcoin for public stock investors. I don't mean that in an illicit way, but basically if you can't or don't want to own actual Bitcoin, you have a stock that's now a proxy for it. And you can just do it. It's on the NASDAQ as opposed to having to worry about all the rest of it. So I think we're in the kind of self-reinforcing mode of this feedback loop that we have going right now. There's no right or wrong price for it, right? I mean, that's kind of the way it always comes down.
It broke through the $50,000 level just a short time ago. It's now up more than 70% since January 1st. So it's come off a little bit right under that 50,000 mark, but pretty extraordinary run, no matter how you look at it. Joe?
I just wish I wish we knew all. I wish we could see into the future, Andrew, because all you need to do, you take the total global financial system, right? Yep. Figure out what that is. And then divide it by 21 million. Well, first take the total financial system and decide what percentage of that could someday be crypto related or right. Where crypto could be play a role.
Right.
Or Bitcoin related. Then divide that by 21 million. And that's where you get some scary numbers. And I don't know if they're legit but at the same time, you worry about individual countries and governments that have a huge vested interest, for example, the United States and the dollar remaining the reserve currency. So what do they do when it becomes clear, or if it starts to look like you're not having control, which maybe it's already starting to look like that, isn't it? What do? They can do whatever they want, can't they? Or can they?
What's the number at which it gets out of control? And is it the number, the price of Bitcoin, which is out of control, or is it the distribution of Bitcoin, meaning it's still held in only a few hands on a relative basis to the country? And so that's, to me, what you should be looking for, because you can buy half a Bitcoin, you could buy a tenth of a Bitcoin. And what if it really, to me, escape velocity is not necessarily the price itself, but just how many holders there are.
Right. Well, a lot of people, I've seen some crazy stuff where people write in that it's not a fixed number. It's not 21 million. That because you can divide each one into, and that's where you go, okay, you just need to go back to, elementary school level math, because I'm not even going to have a conversation. Because there are 21 million, whether you split them up or not, it's 21 million. Right. So I don't, it's fixed, and if it has inherent value, then you can make a case. What Novogratz say, 100,000. Other people, I think the Winklevi have said half a million. If you do math like that,
I've heard a million, I've heard 200,000.
Yeah, million. Right.
The other question is, once it gets to those levels, do a lot of people sell out of it? I mean, you're hearing, are people ever really going to use it, not as a currency, but at some point you say, okay, it's made the run, and then does it just level out at this sort of, at some price or no?
Right.
It's hard to know.
Right. If you call it something like the Internet of Money, or you saw Paul Tudor Jones say it's like Apple in the top of the first inning, or Amazon in the top of the first inning, I don't know.
All right, it's time for the Futures Outlook. Bitcoin crossing 50,000 for the first time ever. Let's bring in Jeff Kilberg and Scott Nations. Kilberg, you're first. Where's the next stop?
Well, Judge, we actually saw it print above 51,000. That's the CME Group's February contract. Very high volume. And I think the next stop is higher, Judge. And why is that? It's supply and demand. It's supply and demand if it's any asset class. But here we are in a digital asset class. They've only minted about 150 to 200,000 Bitcoins in the last couple of months, and the demand is much higher. So I think the broader swath adoption, we know PayPal story, we know the Bank of New York custodianship, but I'm actually talking to business owners here in Chicago. They want to pay their employees in Bitcoin. So I think that momentum keeps a bid in Bitcoin. It's not going to be a straight line, Judge, but it's going to 100,000, I think, in 2021.
Oh, all right. Scott Nation's killer's going out on a limb here, just like he did before Notre Dame got rolled by Bama. What's your trade?
Wow.
That is harsh, I will admit. But it's also harsh technically for Bitcoin because to the upside, there's no support. The interesting thing here, Scott, though, is that it's only barely overbought. The relative strength index for the Bitcoin futures is just over 72. We know it can get much more overbought. It got to 85 at the end of November, got to 95 in January. Both were resolved by big one-day sell-offs. 15% resolved the overbought situation in January. So if you're looking for help technically to the upside, there's nothing there. I mean, the target there is to the moon. To the downside, 40,000 is important. That's where this rally really got going. So if you're a bear, that's the target.
Yeah. All right, guys. Good stuff.